In this video, I'm going to run you through Logan City Council. I'm redoing a video that I made back in 2023. I've been actively buying properties across Logan since 2019. So in this video, I want to walk you through the new pricing structure. You can't buy houses for 500K in the Logan area anymore. So we need a bit of a reality check. The second part is I really want to go through the new flood maps. So the flood maps have been updated around mid 2025, and I reckon it's very important because if you buy in the wrong location, you can get hit with ridiculously high insurance premiums, and I've heard some horror stories which I'll get to in a minute. So the first phase I really want to talk about is the new pricing, but let's quickly open up the map and I'll run you through Logan just briefly so you can get an update. So Logan City Council, it's roughly about 20 30 k's out from the Brizzy CBD. The reason why Logan's such a great spot is because you've got the Pacific Highway. You can get to Brisbane, you can get to the Gold Coast. It's really well connected. The highway's getting a bit packed at the moment as the population in Queensland and Logan and everything like that is growing rapidly. But the biggest thing is that they're actually creating another highway that's going to go along the back there. It's going to connect up at Eagleby. They've already made the first stage where it's up past Coomera, and then they're going to go to stage 2, 3, and then 4. So it's getting built out. And then once that's built, it's just going to make Brisbane and the Gold Coast really well connected. And the Gold Coast offers a ton of lifestyle. If you're in Logan, it's like half the commute time than if you were in Brisbane. Other things that are happening around Logan. So Crestmead have, like in 2023, I was talking about a massive logistics area. They've gone ahead and they've actually built it now over in Crestmead. It's a $3 billion project, but now they've got, the Bunnings Warehouse Distribution Centre. They've got Asahi Distribution Centre. And what that's done is that creates a ton of jobs just in this pocket for, pickers and packers. And these guys are making, $30, $40 an hour. So you get tradies that are just quitting their jobs and just going to work in these warehouses, nice and air-conned. With Logan, you've got, a ton of warehousing type jobs, but then you're quite central because you can get on the highway. If you're a tradie, you can get around to different locations and so forth. So it's really well positioned. You jump in the car, you get into the city within half an hour. So location is perfect. In regards to train lines, the train lines are more in your, Woodridge, comes down to Beenleigh, which is great. But if you're on this side, what a lot of people do is actually take the bus lanes. So there's a bus station in Browns Plains, and they've got direct lines to get into the Brisbane CBD. So they've got dedicated bus lines that are right next to the highway, so they don't get stuck in traffic. It's a streamline into the city. It's something crazy like 45 minutes to catch a bus from Browns Plains to the Brisbane CBD. So you would honestly kind of be stupid to drive because you could just jump on a bus, get into the city. While you're on the bus, you could probably do more work. That's a little snapshot of Logan right now. They're upgrading the hospital. So there's billions of dollars getting spent in the area. And then on top of that, you've got the Olympics coming. So that's definitely bringing the hype. It's bringing a whole set of eyeballs to the Logan region. And over the next 4 to 5 years, I can just believe it's still going to just keep growing. It's growing at a rapid pace right now. So what I want to quickly touch on before we start talking about locations is a big thing with Logan is you want to make sure that you are always checking your housing commission. There was a point back in, 2023 to 2019 where you're like, okay, let's buy a property in Woodridge. Let's buy a property in Logan Central. And you would have done very, very well. A lot of the real successful guys, they brought a ton in these areas. But now we're in a different type of market, and you want to be very particular with the suburbs you buy in. You kind of want to pick and choose the suburbs according to housing commission. Another aspect is you want to make sure that there's a lot more owner occupiers to investors. So if we get to this Marsden, these areas are orange. obviously Regent's Park and Heritage Park are much better suburbs. I would recommend those over any of these suburbs any day of the week. But you can see these are now orange. Back in 2023, they were all mainly investment owned. But what's happening with this pocket? It's gentrification. It's gentrification from people that can't afford Callanvale, Algesta, Sunnybank Hills. Like these suburbs are trading at 1.2 million pretty much. And if you don't have 1.2 million, you're going to take your $1 million and you're going to start shopping in Hillcrest, Boronia Heights, Crestmead, and Marsden. It's just the reality of it. And you're going to see that same narrative play out on the southern part. So you can pretty much skip over, or if you're a smart, you want to skip over the Woodridge and the Logan Central side of things. You want to just take a big jump over those suburbs and make your way towards Meadowbrook, Tanamera, Bethania, Waterford. These are really good suburbs. They've got little to no housing commission, and then check out the owner-occupier ratio, 67%, 67%, 68%. And you've got Tanamera at 68%. And then you've got these like really A-grade suburbs, but these are now trading at about 1.2 million, which will go into some sold properties in a second. But just to give you a quick overview, the pockets, these are the pockets that I'm targeting. You can see all the deals that I'm looking at actively right now, even across these pockets. Just avoid, your Woodridges and stuff like that. So as we go and talk about some sales, well, just head over to Crestmead. So Crestmead is just located down here. It's a suburb that I was talking about in my 2023 video, talking about how much it's going to grow, and it's done very well. But what I'm seeing is first home buyers overpaying on properties. Like this one here, it sold for $900,000. I genuinely believe it's only worth $820 at the most. It's only 600 square meters, 3-bedroom, 1 bath. So someone's gone ahead and spent an extra 80 grand. Short term, it's probably going to go to that $1 million mark. It's going to go to that $1,050,000, but they could have, if you're a property investor and you spend $820 on the same deal, you can make 200 grand. So I just want to outline this, this person paid $800K on a 2-bed, 1 bath, which that's actually a lot of money, because I know this property's been traded a few times. I can't believe they paid that. That's a bad example, but this one here, you've got a house and you've got a granny flat at $935. I believe that's great value for money, rather than spending $900K on this property. So now, if we even went over to the other neighboring suburbs like Regent's Park, which I love, I think it's a great suburb. You can then go into the sold section and you can see it's $1,080,000, but that's a huge 5-bedroom. And then there's some properties that are trading at $820, $936,000. You're better off spending that extra 30 grand to get into a suburb like Regent's Park. The suburb itself has way better dynamics in regards to higher incomes, higher owner-occupier ratios, little to no housing commission, and the rents are higher. So when you look at the rents, they're actually going to be higher. So now let's jump over to Woodridge. So Woodridge is the pocket just above, this is a cluster of suburbs over here that are just full of housing commission. I don't want to rip on them, but they were great suburbs. But right now, it's actually quite scary. Look, somebody spent $881,000 on this renovator. That's so bad. They still have to sink $100K into it. And this is what I'm seeing. And that's why I'm making this video, because I want to build awareness around this. I don't want people to get hurt when the market does stabilize. And spending that type of money is just going to put you in a really bad financial position. You got people spending $890 for 3.2, $710 for 3.21, and then you look at this 3.1 for 740. See, that's a Woodridge price. That is a Woodridge price right there, not this price. So Hopefully that sinks in. If you go to Woodridge, you want to spend a lot less. Now, when we head over to a suburb like Waterford, like this is a beautiful suburb, nice and leafy. Families come here. You'll find the rents are much higher. So we're going to put this over to rents so you can just see the difference. So we're going to go Woodridge, and then we just want to show you what the rents look like in Woodridge. 540, they're renting 3-bed, 1-bath for 550, 590. Now, when we head over to Waterford, you can see you spend a little bit extra. Like you can find some off-market deals for 422, and that's when using a good buyer's agent, they'll find you these deals. Or if you just make the effort and call agents, build those relationships. But it's pretty hard because a lot of us have been around for 5 years and we've got some strong relationships with the agents. But we'll just use that 915. You got a 422, 400 square meters on a good street. So now we look at the rents. And you can see the rent skyrocket, 680, even a 321. This is a dual key. So there's only one side, 600, 540, 550 for townhouses, 720 for a 422. That's like an extra $100, $200 compared to Woodridge. So it's about looking at the suburb, looking at these metrics, because as a flow-on effect, you're going to have lower vacancy rates and you're going to have higher rents. So then you're going to protect the downside for if the market pulls back or does anything funny in the next 2 to 3 years, you can rent that property, you can hold it. It's an area where families will buy there regardless of the type of market. And what you're doing is you're de-risking this property purchase. So the last area I was just going to talk about was Shayla Park, just to show you, look, 1.2, 1.25, these areas are now becoming 1.4 million. That used to be the price that you would see, 1.4 million. That was how much the prices were in the inner city. But now, if you go into the inner city, like we'll just show you 8 Mile Plains. This is not even proper inner city, but you can just see how much properties are selling. Like townhouses are 810, townhouses are 862,000. And then when we make our way down to houses, $1.8 million. So this is the reality of the inner city, which I'm not going to go too much into in this video, but that's the ripple effect. So people with $2 million, it doesn't get you much now, and they're making their way down towards Springwood and all these suburbs, and then on the western side, which I'm not going to get into, but they're making their way across that corridor as well, where you get 2 types of buyers. So now I want to quickly touch on the flood map. So everyone that is buying a property in Logan, please jump onto their Logan flood maps, just so you can save yourself a lot of stress. You can see, a big portion of Waterford, Logan Reserve, it's flood affected. So you're just de-risking it. And I'm just going to, all you do is you put in the address and then it'll come up with a map. It'll come up with a report. I just wanted to share some deals where, we originally brought them and they weren't flood affected and now they're flood affected. These clients have 2 options. They can either go ahead and sell it or they'll just retain the property. So this is the first property. We got this property for this client back in, 2021 for $370. We then built the granny flat on the back. The client then has paid off all the debt. So he's just getting $1,100 per week in passive income. We brought this in a self-managed super fund. They went and updated the flood map and now his property sits in the flood zone. He's got 2 options. He can sell the asset, which I know he'll be able to sell it for about $1.1 to $1.2 million, or he can retain it. The thing is, when we look at the flood report, these are the things you want to look at. So the property's in the moderate to low risk. So that's okay, but it's not preferable. It's as soon as we get into the high risk zone, that's where it starts to get very expensive with your insurance policies. The next one, this is the big one as well. There's this new portion called future climate scenarios. So some insurance companies are actually using this, and what you'll find is the insurance policies are actually going up quite a lot. So there was properties that just became in the flood zone. and then they were in this future climate zone in the dark. I have to say these lower levels within Logan, they're okay. So this client is in the clear. Preferably, you don't want to be in these areas. So his insurance policy didn't go up, but if you're in these darker blue sections, like I heard of a horror story, first home buyer went unconditional, worked out once he went unconditional that he was in a flood zone. His insurance policy was over $20,000 per year. They struggled with finding someone, but he was unconditional. So that was because he didn't do his checks. I talk to real estate agents all the time, and a lot of people fall into this trap. Here's an example of another property that we got for a client, 2 Rasmussen. Back in the day, not flood affected. Bought it 2021 for 465. We brought it off market for him, and now it's like worth 980K. So they made a mozza. We just load that up into their address. You can see there's no blue. They are out and they're clear, but a big part of Marsden does flood. And then we've got the report somewhere there, which I don't generate, but you can see some properties got affected, some properties didn't. A lot of my clients didn't get affected, but there was a small portion that did, unfortunately. Like, I couldn't have picked it, but you moving forward, do your research and you'll be able to pick the areas that are flood affected. So you just don't buy it. Like, it's better you not owning a property that's going to give you a headache than buying something that's just going to give you headache and stress. So that's the idea behind it all. So I've just dropped a bunch of information on you. I guess my final takeaways is really, if you're looking to buy in the Logan area, I still believe there's a ton of growth. These properties are going to head towards that 1 to 1.1 million. I'm very certain of it, because inner city is now 2 million. So you're going to get a ripple effect over the next 4 to 5 years. But if you're the person that goes to auction for an investment property, you're not going to win. If you're the one that's trying to battle it out with first home buyers, you're not going to win. You're going to be paying a premium. And then if you're going to pay a premium, you're better off not even doing it. Like, not at this stage of the cycle. You go and pay a premium in Melbourne because that's a defensive type strategy. You're buying right at the bottom of the market. You're not buying in at the top. So I'm going to go into that in another video about offensive and defensive. But when you're playing in an offensive market, you need to make as much money in the way going in. That wraps up my video. I hope you got some value, and give the video a like and share. But otherwise, I'm going to be making some more videos around Ipswich, Logan, and the Moreton Bay area.